Well, hello and welcome to the first FlightGlobal webinar of 2021, sponsored by Embraer. Today we brought together an eminent panel of industry experts to forecast and debate what the year ahead has in store. Now, we ended the annus horribilis of 2020 on a relatively bright note. The first COVID-19 vaccines were approved and rollouts had begun. There was talk of 2021 being a year of recovery, with some airlines anticipating robust bookings for the northern holiday season. And what's more, regulators approved the return to flight of the Boeing 737 MAX after a 20-month hiatus. But since then, skyrocketing infections and hospitalization rates in many regions of the world, new travel restrictions, and glitches with the vaccine program have cast a bit of a cloud over that optimism. So how confident can we be that 2021 will see some sort of return to normality? And what will the pace of that recovery be? Are things going to get worse before they get better? My guests today represent a wide range of expertise and backgrounds, but what they have in common is that they all have strong views on these questions. So let me introduce them. Arjen Meijer is President and CEO of Embraer Commercial Aviation, a role he assumed last June after 4 years with a Brazilian manufacturer. Now, he'll be hoping that a post-COVID right sizing of certain airline fleets will work in Embraer's favor. Richard Abulafia needs no introduction to those who follow his many insights in the aviation media. Vice President of Analysis at Teal Group, he manages consulting projects, and he's advised numerous aerospace companies. And we look forward to hearing his analysis today. Paul Gainey is a Chief Risk Officer for Avalon, one of the industry's biggest leasing companies. And he was previously responsible for Avalon's relationships with airframe and engine manufacturers. And we'll be hoping that he can provide some risk assessment for us on the immediate future of the industry. Rob Morris has almost 30 years experience as a commercial aviation analyst and heads up Ascend by Cirium, FlightGlobal's former sister business, and recognized by its industry peers as a praiser of the year for the 7th time in 10 years. Rob, welcome. And finally, representing the airline sector is Brian Pierce, Chief Economist of IATA. An economist with 35 years experience in several industries, his views usually make the news, including just a few days ago, a rather downbeat prognosis of the industry's prospects over the next months. So just before we begin, a reminder on the format. We're live for the next 55 minutes or so, and we welcome your questions. So please use the Q&A icon at the bottom of the screen rather than the chat icon to submit your questions. And we'll try and get through as many as possible over the course of the event. So first, gentlemen, just let me ask you a quick one. Are you more confident in January than you were, say, in November or December? Let me start with you, Arjen.
Yeah, thanks, Murdo. That's actually a good question. I think on a positive note, we are seeing the vaccines being approved. I think when we were in November, that was still the big question mark. There was hope, but I think now we all see a light at the end of the tunnel. I think all of us are also a bit concerned that the tunnel may be lengthening a little bit over the next couple of months. It will probably get worse before it gets better. We do see aggressive mutations. We see countries being very careful with opening up borders. And that's clearly not helping the industry getting out of COVID on a very short term. But I remain hopeful that 21 will at least be a lot better than 2020.
Richard.
Yeah, I completely agree. I think it's important to look back to where we were as far back as March when this whole atrocity really hit in. And there have been so many happy surprises, believe it or not. The idea that the Dow Jones Industrial Average would be in record territory unthinkable. Yet here we are. The economy is in much better shape. Even in November, there were doubts. Maybe it was just a massive injection of stimulus cash by multiple governments, but no, the economy has held up a lot better than expected. As Arian says, the vaccine thing, I mean, I had discussions with people who really know what they were doing in the biological sciences who said as recently as November that maybe we just can't have a vaccine for a disease like this. It might not be possible. There were so many doubts, and now there's no doubt at all. You've got at least 3 really great ones with a much higher than expected efficacy rate.
Excellent. Paul, has your mood changed between the end of 2020 and the start of 2021?
It has, I think, certainly from November, because of the vaccines. And I think people were so keen and so focused to get to vaccine efficacy that we weren't thinking so much about what comes next. And there was always going to be a choppiness around availability, access, and then even once that's passed, there are technological, regulatory, political issues around what does it mean to actually have had your vaccine and proving that is the case when you go to border control somewhere else in the world. So we have made progress, Murdo. The challenges that we're seeing now, I don't know if they were inevitable, but they're not surprising. But what I'm really optimistic about is the extent of the pent-up demand. And so I think about 2021 as 2020 in reverse. It's going to start grim, but I think we're going to come out of it very strong. So I'm cautiously optimistic.
Rob, at Ascend by Cirium, you put out your own forecast webinar for 2021 fairly recently. What's your how do you feel, and do you feel in a better place now than perhaps a month or 2 back?
Yeah, I think Murdo, that like the others, I was thinking about this. I would caution to say I'm less pessimistic than I was then. But I think, as Paul was expressing there, we've always thought this would be a 2-step forward, 1 step back, 1 step forward, 2-step back process. I think the vaccines are our best hope, but we need to understand the efficacy of the vaccines. I'm surprised at the pessimism that's arisen from the mutations. We always knew that viruses mutated. We always knew that the flu season was annual because flu mutated, and every year we tried to pick the best vaccine for that. And I think we'll see the same kind of thing with this disease. But it does feel like, if you think back to December when the vaccines were first announced, we had in the UK a very strong tick up in bookings in travel. Immediately, people are desperate to be optimistic. People are desperate to get back out of these home offices and into the world again. So rather like Paul said, a grim few months perhaps, but after that, we hope that the summer can see things recover back to somewhere where they would have been before.
Thanks, Rob. And Brian, a few days ago, I think you and IATA put out what I refer to in my interest, perhaps a fairly gloomy outlook about how things were looking for the airlines at the start of 2021. Would you say that things have perhaps taken a step back from some of that optimism that was around when the vaccines were getting approved?
I think the reality is that they have. I think it's going to get worse before it gets better. I mean, I would say I think we see light at the end of the tunnel, and I think the vaccines, and we know their efficacy, that will make all the difference. But we've seen bookings fall quite sharply after Christmas. And, we know the first quarter, just looking at the forward bookings, I mean, to some extent, it's a little hard to tell because people are booking so late nowadays, but they're worse than they were in the fourth quarter. So it does look as if it's going to get worse before it gets better. But I would make a distinction between domestic and international, because I think, I think Richard mentioned the fact that stock markets are saying, well, the pandemic's over now, and the economy is looking in really pretty good shape. I think domestic travel looks really good, and we've seen that in many markets. It's international where I see the problems, and that is driven by governments' travel restrictions, and it's the health ministries calling the shots. They're all calling different shots, and now we're seeing requirements for PCR tests being put on top of quarantine restrictions, which doesn't really give one much confidence that, once we get vaccines spread out amongst the population, it doesn't give us much confidence that we'll see travel restrictions coming down very quickly. So I think international is the problem area.
Thanks, Brian. I mean, I want to just put a little bit more flesh around that, because we've talked there about vaccines, but the shape and the timing of that recovery in 2021, what that's going to be like, what parts of the market are going to come back first. Brian, you talked there about domestic, and I think we've that's common consent that business travel generally and long haul traffic, partly because of the inconsistencies between different authorities in terms of who can travel and quarantine restrictions and everything, that's going to be very, very patchy. But I think also there's going to be an impact on business travel generally. I'd just like your thoughts on that, really, that sort of domestic versus long haul and leisure versus business. Brian, let's go in reverse. Let's start with you on that, and just put your thoughts around what sort of shape that recovery is likely to take during 2021.
I mean, we have seen lots of pent-up demand. Whenever governments, well, first of all, domestic markets where the virus has been brought under control, like China, like other Asian markets, to some degree, Russia. Those domestic markets have, we have seen them fully recover. So clearly people want to fly. And where we've seen governments relax travel restrictions, and in Latin America, we're actually seeing some important examples of governments replacing quarantine requirements with testing requirements, and passengers are traveling, people are traveling. There is pent-up demand. I think, though, it's for VFR or leisure travel. We're seeing the business traveller being absent, which is obviously making a big difference to yields and challenging many of the business models around.
Rob, what is your take on which parts of the market are going to recover fastest?
So again, there's a risk this panel is going to have violent agreement right the way through, but I agree with Brian. It's very logical that domestic markets will be first to recover, because domestic markets require a unilateral action from a single government to re-enable them if the virus is under control, whereas international markets require at least two governments to be involved in discussions. But I want to sound a note of caution as well. So, China has fully recovered, but if we look at data that tracks aircraft on a daily basis, there are some signs that Chinese domestic fleet or single-aisle aircraft particularly are inflecting downwards, which perhaps could be driven by local outbreaks in northern China. So, the Chinese market locked up very quickly and was able to control the virus, but as the market frees somewhat, there is a risk with mutation of further transmission. So again, the kind of one step forward, two step back model. Brazil is a great market. In Brazil, one of my colleagues pointed out to me yesterday, GOL reported they were cash positive in December. How many airlines can say they were cash positive in December? But GOL were, so they've got the cost under control. The Brazilian market opens up. So yeah, domestic first, and regional markets within that. I'm sure Arsham will comment about that, but regional markets, because a lot of regional markets, by their very definition, are essential markets, essential air service or social service alike. So domestic, regional first, long haul, frankly, could be several years at least.
Yeah, I mean, we'll come on to that later on, the long haul market and just how badly that has been affected and how long it's going to take to come back. But Paul, just some general views from you on that shape of recovery and speed of recovery during 2021.
Yeah, and I think it's important that we don't speak about it as something that might happen. We are seeing recovery in certain domestic markets, notwithstanding the point that Rob made about what we're seeing and tracking in China. It isn't a constant up, but one would expect there to be an almost exuberance once travel is possible again. Although the US domestic market hasn't recovered the way we would like to see it yet, there are some extraordinary statistics about the likely demand once people are confident to travel again. So the US has given more on an inflation-adjusted basis to consumers through its stimulus checks than it spent on the entire Second World War. And consumers have not been able to spend that money because they've been at home. So they have reduced household debt to its lowest level ever. And it has added $1 trillion to checking account balances, not savings accounts, checking accounts. People want to spend. There is no reason I can see structurally why human behavior will change in the medium term, never mind long term, because of this pandemic. It's not the first pandemic we've ever faced. So this pandemic and crisis will end. I believe if governments can get out of their own way and ensure that passengers are confident around travel, and that confidence has multiple facets. It's health, it's confidence that you can go and do whatever it is you want to do where you're going to, and that you can return and not have to sit at home for 2 weeks and not be able to live a relatively normal life. So governments and our medical experts are responsible for ensuring that confidence returns. And when it does, I believe we will see a huge increase in demand, unquestionably domestic first, because it's easier to deliver that confidence on a domestic basis, because it's just one government, as Rob said, but then it will follow internationally.
That's a very good point, and I was going to touch on that later on about that you know, how much of this is sort of demand driven, if you like, the passengers coming back with confidence, and how much of it is constrained by regulations imposed by governments, and what the balance is there. But we can maybe talk about that in more detail later. Richard, what are your views on that shape and speed of recovery in 2021?
Well, Murdo, if you're asking about shape, I'm a big fan of econometric alphanumeric metaphors. So, you know, in the short run, I'm a huge fan of the K-shaped recovery indicator, which I think Brian did a good job of outlining earlier with the, you know, domestic coming back great, and then the other part of the K, international, particularly business international, not so much. That too will pass. I tend to agree with Paul that there's, in the long run, there will be some behavioral changes by the airlines and whatever, but the actual scope of the human experience and his preference for travel, nah, it's not going to change. It just isn't. Not just for economic reasons, just because of human nature, whatever else. The other econometric metaphor I like is the division sign, which I think will probably have some relevance. I tend to be very bullish on the recovery, what the New York Times calls revenge travel for vacationers, and of course, just the immediate need to get out there and see clients and business associates. I think that produces a very steep recovery, first part of that division sign, and then things might plateau out for a while. And we might not see the kind of 5 or 6% per annum growth that we've become so accustomed to over the years. It might kind of flatline just because, well, we won't have that massive stimulus injection, the enormous pent up demand. It might be flat for a bit. So my metaphor, my econometric metaphor now is for a time the division sign.
Okay. Ian, how do you see that the recovery happening in 2021? What parts of the market will benefit first?
Yeah, Murdo, well, a lot has been said, but I strongly agree that I think the willingness to travel is certainly there. I think we had several examples over the last period when COVID was sort of down in the different regions that people are willing to travel. I think it's much more the restrictions that hold them back and the uncoordinated approach between nations, which creates uncertainty. You can book a flight, but you don't know if it will take place, whether you can get into the country, whether you can get out again, what you need to get out. I think it's those uncertainties which are really affecting the willingness to travel at the moment. And that coordination, unfortunately, is not improving yet. So I think where you have no borders, like intra-US, intra-Brazil, intra-China, you see the travel pick up. You see the regionals taking the lead there. Obviously, the airlines are trying to rebuild their hubs and using the smaller aircraft. So that effect is very clear. And I think that's the domestic side and most likely the leisure travelers, that's what will come back first. I mean, they take their own decisions. I think the business traveler, I think, is restricted by the company decisions to protect their staff. So I also see a lot of employees that would like to travel, but their companies have a policy that's holding them back at the moment. And I think that will take more time to be released. But I also think there, I mean, I hear a lot about, oh, the business patterns will change and everyone will be doing video calls. I think, yes, in the long run, there will probably be a little bit more pickup. People will understand that it does work. But I think the overall impact will also be limited. I think people have an inherent need to meet. People want to go out and travel. So I think in the long run, it will come back. But there will be behavioral changes. We will in the long run see, I think, logistic patterns change. People will maybe live a little bit further away from the office because we can work from home a bit more. So the pandemic will have an impact. The other thing I would say is that I think the shock of the pandemic and the impact will make airlines and people rethink about that the world is not a given. There are inherent risks in our industry, unpredictability. And as an airline, you will need to find ways to be adaptable. And I think that the market has grown limitless over the last 12 years since 2008, adding a lot of capacity. And then when something like this hits, I mean, the higher you climb, the deeper you fall. So I think going forward, airlines will certainly rethink their volatility, their flexibility to the market. And I think mentioning our segment there, I think that's where, you know, smaller equipment will play a big role, which are offering a huge cost effectiveness to the market.
Okay, thanks. I want to stick to that theme that you and Richard brought up. I know this is about forecasts for 2021, but looking at those possible long-term behavioral changes. Yeah. Does anyone want to just come in on that as well? Because we're having this meeting on Zoom. We're joined by 785 people at the moment. It's these tools are fantastic ways to connect, and you know, people have raised the question that, you know, maybe we don't need to do business travel in future. Yes, visiting families and friends. Yes, you know, getting to a sunny beach, or a fabulous historic city for a weekend break. But do we need to do business travel? What, Richard? You're very much of the view that yes, that will come back because we do. Does anyone else have a view on that? Brian, do you want?
Yeah, I mean, we have a lot of the big corporate travel buyers and the travel management companies as part of the groups that we operate in the industry at IATA, and they're clearly saying that at the moment corporates aren't traveling, and it's, you know, it's the duty of care concerns that companies have at the moment. And I think that's going to be around for a little while, because although the vaccine news is really good, we need to think about who's being vaccinated first. And it's the vulnerable parts of the population which tend to have a pretty low propensity to travel. You know, the younger working age folk who tend to be our customers most of the time are probably going to be sort of last in the line for vaccination. So, you know, there is going to be, I think, you know, some delay here, but I do think business travel will come back, and I think there's good scientific evidence that if you're trying to transfer sort of tacit knowledge, you know, knowledge that can't really be written down about how to run a business or an operation, you need to meet face to face, and we know that relationships. Business relationships are pretty, you know, that is, face-to-face meetings are important. So I'm also confident that we are going to see, you know, a big rebound in business travel. But companies are at the moment very cautious until we see that, you know, perhaps the herd immunity or the widespread vaccination, which will take time.
So it will come back, but perhaps a lot slower than the leisure market will come back. Rob or Paul, do you want to come in on that?
Can I come in, Murdo, on that?
Yeah.
So yeah, I mean, I agree again, learned behaviours, you know, who would have thought 12 months ago that we'd have been doing this for 12 months, which we pretty much have been. And in the early days, it was quite helpful to be able to reach out to 800 people and discuss our views. But one of the really important points coming from a business that thrives on collecting intelligence is that when I deliver a presentation at a conference, I do it like this, and then I turn it off and go and have my tea, as opposed to spending the next 3 days networking with all of the individuals there and discussing the points we've made and learning about what's happening in the market and challenging what we've been presenting. So in that context, like Brian, I'm really comfortable that it will come back. I don't think it'll be in 2021. If you look at the events calendar, it all seems to have collapsed into the second half of the year. And there are, 3, 4, for example, ISTAT have 4 events within a month of each other, events that would have been over the 12 months that we would have attended all of them. So it's going to take a while, but I think ultimately it will come back. What might not come back though is the intra-company business. Again, I have a team with offices in London, New York, and Hong Kong. And I would have brought that team together typically once a year to strategize and simply socialize together, work more effectively. I think my business has learned that we can do that without having to meet, and it won't give me the budget to do that possibly ever again. So some element has gone back, but how big that is, I'm not sure.
Yeah. Paul, you work in a business where you've got a global customer base. You're all over the place. I mean, how will business travel, do you think, be impacted in 2021 and beyond?
Yeah, so this may be a rare opportunity here to actually find some disagreement on the panel. I am extremely bullish on business travel. Sure, it's lumpy, and I think the guys have very accurately pointed at why that might be, which may not be obvious to a lot of people, which is that the individual business traveler doesn't always and rarely has the opportunity to create his or her own travel policy. So it's top down and quite blunt, and it's around safety and duty of care. So clearly that's going to take longer to resolve itself than the simple matter of me not having been home to Ireland for 12 months and going to see my mum and dad. However, I think Zoom and their competing platforms work for sustaining existing relationships. I think it's difficult to create new relationships. I think that, as Arjen mentioned, one structural change that might occur in our economy is the preparedness of companies to allow their staff work diffusely and teams to work diffusely. So I think there might be a contrary development, which is that teams now work geographically distant but come together with greater regularity to be together, in terms of intra-company travel. So I actually think there's an opportunity for a new kind of growth that we wouldn't have seen before due to those kind of structural changes. And last but definitely not least, in my industry or in anyone's, how many transactions do you have to lose before your boss says get on the airplane?
That's a good argument, Paul. And I think what's important is a lot of it works today because we have to, right? We have no choice. And to your point, there will be a push to go travel again as soon as we can. I'm pretty convinced. But I think logistical channels might change, right? Because it's very, if you have your supply chains all around the globe and you need to fly out and you simply can't do it today. I think people will reconsider some of those elements. But I agree. I think there's a lot of it will return in the end.
Okay, I'm going to come on in a minute to discussing more about the aircraft demand and how this impacts on fleets and the aerospace side of the market. But I'm going to take just a couple of very quick questions from the audience. Won't necessarily go round anyone, but if anyone wants to jump in with an answer, please feel free. This is from Nicholas Yates. Won't most of the world need to be vaccinated before air travel makes a comeback, even given the pent-up demand? So is all this possible until we get that sort of critical mass of everyone being vaccinated, or at least, I don't know, 80% or whatever?
The answer is no. I mean, I think what is critical is that the vulnerable parts of the population are vaccinated to take pressure off health services. But then, I mean, I guess one of the factors is we are going to be, this virus is not going away. We are going to be living with it. So we'll be developing ways of doing that safely. But testing offers an obvious way to make sure that there aren't any risks. And we know, I mean, there was a very useful ECDC, the European Centre for Disease Control study published just before the end of last year, which pointed out that the flying population has not had a higher prevalence of the disease. It is not increasing the risk of importing COVID-19. So I think what we've been seeing is travel restrictions being put in place by the national health authorities, whose risk tolerance is exceptionally low. They seem to be trying to eliminate all risk, and that's going to have to, one would imagine that would have to change.
Okay. I just want to change the subject slightly. I mean, we've always had a huge impact on our audience here from representing one aircraft manufacturer, but we've obviously seen a huge impact on the manufacturing side, on the supply chain. Orders and deliveries just almost wiped out in 2020 with a few exceptions. We've also seen a lot of younger aircraft being retired. We've seen a whole change to that to the fleet mix. Rob, it's a huge question to fire at you, but when do you see how do you see 2021 panning out in terms of orders and deliveries, and at what point are we going to get back to that point where they're in parity, when demand is in parity with the number of aircraft that are being built?
So demand in parity with supply depends upon the recovery scenario, clearly, and we can easily convince ourselves with recovery scenarios we model there's quite a large surplus of aircraft in the system, several thousand, through 2023, 2024. But of course that depends on the supply coming in. Well, supply went down. Actually, supply deliveries from Airbus and Boeing reduced by 45% last year. They weren't down as high as 50%. There was 680 odd aircraft delivered, including freighters. And this year we think there'll be 1,000 or more. There are some prerogatives for that. I mean, why would an airline take delivery of an aircraft now? Because it can immediately go and sell it to Paul, who can then give them back $45 to $50 million and free up some cash. So sale and leasebacks are clearly a key driver. But it's going to take quite a long time. The positive on this is, of course, the OEMs did correct very quickly, clearly because they couldn't physically deliver aircraft because of restrictions. But Airbus corrected production they took production down by 40% very early in the pandemic. That's a positive compared to previous cycles where supply didn't correct. But I think we're going to see about 1,000 deliveries this year or so, and that'll be stable for 3 years or so, whilst the surplus is soaked up.
And how does that surplus get soaked up? Because yes, aircraft have been delivered, but with so many existing aircraft surplus to requirement, what happens? Do we see more scrappage? Do we see more P2F conversions? What are some of the directions that goes into?
Some of both. Sorry, some of both. So P2F, we're seeing there's something like 50 odd aircraft already already have slots booked to go through this year, and more besides. 737-800 is very popular for P2F right now. Part out retirements were lower last year than previous years. I think people are holding and waiting because the demand for used serviceable material is lower than it were. So why would you scrap and make less value? But that will start to take off again as more aircraft go through maintenance. For me, the biggest issue is airlines right now. If you look at their utilization, their unit utilization, it's down 25% or more on average globally. And that's a very big inefficiency. So for now, they're doing that because they want to keep the aircraft active, because they don't want to put them into deep storage and not know what to do. That's going to come back at some point, but I think we're going to see an inefficiency there for some time. So the aircraft come back in because they're being used less efficiently, in our opinion, for a while, but it takes demand recovery to finally soak them back up again. There will be natural retirements as well.
Paul, do you want to come in on that? I mean, how do you cope with all this as a lessor?
Yeah, so I do have fairly strong views on this. The manufacturers sit at the heart of what is a fairly fragile ecosystem. And the imbalance in supply and demand existed for years before the pandemic. they were building airplanes to meet supply of capital, not real demand. And that was seen with a huge increase in the direct customer base over the last few years being leasing companies. And what they were finding was that the manufacturers more than doubled the number of leasing companies that they were selling directly to speculatively. Many of those companies have not been through a downturn. Now they're going through the mother of all downturns. So there is distress in the leasing channel. And that's number one. Number two is that if you look at the production rates following the recessions, the downturns in the 80s and in the 90s and post 9/11, it took 5 years from peak production to get back to the start of the ramp up. And we have Airbus and Boeing this year, in Airbus's case, talking about increasing production again, and Boeing being motivated to push lots of built and undelivered airplanes into the market. And every airplane that comes into the market, it's a zero-sum game, because 30% of the global fleet is grounded. And to Rob's point, even the airplanes that are flying at lower capacity. So there isn't the capacity in the market, and nor is there an appropriate historical precedent for the manufacturers delivering that many airplanes. And then layer on the fact that the leasing companies, many of them are challenged, and we're fortunate because we've got a fortress balance sheet, which has been our focus for the last 12 months. That hasn't been the case for everybody. And in times like this, the more risk-averse sources of capital retreat from the market. So there is a huge need for leasing companies to fill what is a huge funding gap for the manufacturers, for them to meet anything like the kind of deliveries they're expecting. And I believe that is the biggest risk to the manufacturers' plans. And I think they need to reconsider their plans in terms of deliveries this year and next.
Ian, I'm going to put you on the spot now as a manufacturer. You're not
Thank
Airbus
you.
and you're not Boeing, but you're the number 3 in the market. And how has this impacted you, and how are you reacting to this as a manufacturer?
No, I'm glad Paul mentioned the two big giants there and not Embraer. I think Embraer has had a different way of managing the flow of aircraft going into the market. We've been quite steady over the years. We had zero cancellation, by the way, as Embraer. We had, fair enough, we did some deferrals, so we've helped airlines to push aircraft a little bit out. We had a relatively good year last year in terms of deliveries. I think the story for Embraer is slightly different because of the segment, obviously. If we look at the Embraers around the globe, the utilization is significantly higher than what you would see on narrow bodies. We saw 90 E-jets either in the process or about being finalized, going into new homes on the used market, which is a number higher than we've ever seen before. So in our segment, we do see a pickup in demand because airlines are starting to see that smaller gauge equipment is the way to restart the network, restart the frequencies. So I think it's a fundamentally different story there. And I think the segments up to 150 seats, which is basically capable of flying 25-30% lower trip costs, but similar seat cost. I think those kinds of vehicles for the market will be very attractive. They're very environmentally friendly. I think we haven't mentioned that on the call yet, but we see, especially in Europe, a lot of the help that the airlines got linked to environmental improvements. So we also believe that is a trigger that will, and to Paul's point, I mean, it's a zero-sum game on an aircraft number maybe, but in terms of reducing the environmental footprint, I think we will see some more focus on more fuel-efficient airplanes. And I think for our segment, we're looking quite hopeful to the future and to airlines diversifying their fleet and being more versatile for any shocks that we encounter in the next couple of years. I mean, we can all hope that we won't see another big impact event, but no one knows.
Richard, do you want to come in on that one?
Well, yeah, I think there's a really profound trend here that we should pay attention to when looking at the question you've asked. which is yet another unwelcome arrival of a K, letter K, you know, I mean, twin aisles, no. For a lot of the reasons Aria just outlined, single aisles are enormously popular, even for international routes. So you've got three factors, you know, one, you've got that rather delayed response or that rather delayed recovery for international long haul. You have the enormous and frankly unwarranted production of twin aisles in the great 2011 to 2018 market boom, some of which, as Paul says, was artificial. And then on top of that, you've got, you know, the acceleration of a pre-existing COVID condition, pre-COVID existing condition, which is a secular shift away from twins and towards singles for international routes. And like so many other things that are hitting us with COVID, we're seeing an acceleration of that pre-existing condition. So all of this adds up, you know, our forecast, single aisles, we get back by late 2023, early 2024 in rates. Twin aisles, never. I mean, obviously never is a long time, but in our 10-year forecast, it does not happen. The overcapacity, the hangover is just that problematic when coupled with this airline fleet planning shift. So I guess there's that K again. There's just two ways of answering your question.
Thanks, Richard. I'm going to move, we're a bit, just less than 20 minutes to go. So I'm going to try and get some audience questions in. And we've got two very different questions relating to China. I'm going to fire both questions at you, and just please put up your hand if you want to come in on the answer. So the first one is about the Chinese domestic market. China was the first market to be affected by COVID-19. They were the first to, or one of the firsts to make a strong recovery. And we've seen figures showing the strength of that domestic market. How important will China be to the recovery, both in terms of traffic and also in terms of aircraft deliveries over the next year and the next 2 or 3 years? I'm going to fire one more question at you. It's something very different. It's looking at Chinese industry and the attempt of China to break into the market with the C919. With, you know, Mitsubishi SpaceJet looks in perhaps permanent trouble. But there's a surplus of young, reliable aircraft for years to come at probably very attractive prices and lease rates. So how does COMAC break into the market in such conditions, or is it impossible? So come back with an answer on either or both of these questions. Richard, you got your hand up first.
Yeah, thanks, Murdo. I'd love to address this. China is the most interesting aspect of our industry to me in so many ways. One, of course, let's deal with the China thing first. There is another pre-existing condition. The slowdown in China traffic happened before. As a matter of fact, Brian, I'm sorry, I'm going to have to steal your numbers, but you know, my favorite stat is that October 2018, and Brian, do correct me, 12.2% year-over growth, reflecting a 2-to-1 GDP to air travel demand multiplier. And then a year later, 5.3. Something happened, and that was before COVID. So when they come back, does it look like 2018 or 2019? Similarly, deliveries at their peak, 2018, they were a whopping 23% of global aircraft deliveries. We want that. Thank you, China. But of course, they plummeted to about half that in 2019, a number not seen in over a decade, and reversing a rise that had played out over 20 years. China went from 2% of the market in 2000 to 23% in 2018. Not good to see them, you know, falling down again. And unfortunately, it is matched by a willingness to accept slower growth in the name of greater state control that President Xi has emphasized in China. In other words, they're being very open. We're happier as communists. Have a nice day. That's not good. That really isn't good from the standpoint of growth in this industry. I'm very concerned about that. And finally, lastly, for all these years, I've wondered what the heck COMAC was doing, because it didn't look like there was a way to break into the global industry with the approach that we're taking. And now it's suddenly dawning on me, and I think a lot of my peers, that it's not for global competition. It's for an autarkic future where they've decoupled from the West and follow the Soviet model of providing their own jet transport needs. all of this adds up to the single most scary geopolitical possible development in our industry.
On that note, Rob, let's.
Yeah, quickly. So I just want to talk a little bit about contextualizing China first and recovery. So yeah, for sure, you know, the Chinese market is close to being back to, or if you look at the capacity on the schedule, ahead of where it were in 2019. But the traffic is not back so far. So utilization is down first. The traffic is not back, and the yields certainly aren't back. So when they are behaving in a capitalist market type way, they're trying to buy back the market to some extent. There's been fare wars. There's been fare wars even with the high-speed rail networks over there. So that's the first point. Yeah, and I was going to make the same point as Richard on the C919. For the C919, take a look at the ARJ21 in the regional market, an airplane that took a very, very, very long time to establish itself. But actually, in 2020, delivered as many aircraft as it in 1 year as it had delivered over the whole rest of the program in the prior 5 years, because finally they've established a domestic support network. They've established a reliability that allows them to use it domestically. The C919 comes the same way. We haven't talked about the MC21, talking about Russia, but the same thing there as well, yeah. Where we have a product for indigenous markets, domestic markets, and satellite markets. So yeah, it takes a little bit of demand away from what Airbus and Boeing might have delivered in there, or the leasing companies may have put in there. But in the context of global competition, you know, establishing that support network to make it an export product in the long term is next to impossible. In the short term, it'll happen eventually, but not in my lifetime.
Okay, thanks, Rob. Oh, you wanted to come in on that one?
Yeah, maybe a slightly different angle, but well, first of all, of course, China is the prime example of how the industry can bounce back after COVID. I think it's the example at the moment. We see China as the fastest growing market in the next 10 years. With we project a 3.4% per year RPK growth. So it is obviously an important market globally. The development of airports in China is continuing at light speed. The desired connectivity within China is still a huge strategic objective. So we think that for the regional segment, China is going to be very important in order to connect the full mainland of China and also the Tibet region. We believe that the regional aircraft that are available will help China a lot in that respect. So for sure, China is going to be important going forward from a market perspective.
Okay, we're jumping about from subject to subject here. There's so much to cover. 5 of you contributing excellently, and we want to get through as many questions as possible. I've got one here about how airlines operate their networks after COVID. We've seen some changes in the States to hub and spoke systems. I think with United introducing more point-to-point flights rather than going through hubs. How do you see the pandemic or the effects of the pandemic? This is maybe one for Brian to start with, changing the way that traditional hub and spoke networks have operated, and other traditional networks as well. We saw huge changes after 9/11, didn't we? Huge structural changes to the way airlines operate. Are we sort of going to see that sort of change again?
Well, I think that the way that international markets have opened up or not opened up means that the point-to-point model has clearly been the way to go, and the traditional hubbing airlines have really struggled to get the right sort of feed, particularly the premium feed from business travelers that would typically sustain the longer haul market. So, and you're seeing, here in Europe, you're seeing the LCCs filling a lot of the white space and taking advantage of the opportunities. But I think the fact that we are going to see, at least for a year or so, the flows of passengers between most cities are going to be, going to continue to be lower than they would have been pre-crisis. That means that if airlines can consolidate those flows through an efficient hub, they're going to be winners. So I think we're going to see a smaller number of hubs, but the models are still, that's still a very efficient model. I mean, what the final thing I'd say is, network planning at the moment, to some extent it's being led by cargo, because that's the one part of the business where actually revenues are very strong at the moment. And we're certainly seeing airlines putting on routes because of cargo, not because of the business passengers that would normally drive it.
Does anyone else want to come in on that whole question of networks and route development and how this might change after COVID?
I think it's difficult to tell. Sorry.
Let Paul go on that.
So I think it's difficult to tell, but the one pre-existing trend, which has been mentioned already, is that towards using narrow-body aircraft to service medium-haul routes. So I think this is going to accelerate that trend. And does that become the basis for an entirely new model of low-cost long haul, which has been talked about for a long time, but hasn't proven to be successful? Headlines today.
I think Norwegian today coming out of that market.
Right, read it from your own news source, Murdo. But one thought about what the structural changes that you might see in the airline world, although it's a very different change, I think it's difficult to tell right now what it might look like in a network basis, is the scar that the airlines are going to have to carry for the next decade are financial. Last year, global airlines took on $220 billion of debt. It's a decade of deleveraging. Now that has all sorts of consequences, not just in their capital structure, but in terms of what they can do, the airplanes they can buy, M&A, you name it, airlines' capacity in future years, while still heavily leveraged, to manage even a smaller downturn. So as we think about the big structural shifts in the industry from where we are today, looking forward over 5-10 years, that's the big one that we know we see on the airline side.
Arjen, you want to come in quickly on that? We've just got a few minutes left, and I want to just cover.
Just very quickly. Also to Brian's point about hub and spoke. Clearly, that's the most efficient way to create connectivities, right? And I think, as we discussed before about the premium passenger coming back, which will need companies to be more confident about where the market's heading, and that COVID is less of a risk. But also the effect of people moving away from the primary cities to secondary and tertiary cities, further away from the office. So I think if that trend continues, obviously point to point between the big cities, that's the easy solution. But to also connect the smaller cities within Europe, within the US, within Asia and China, I think the hub and spoke model will keep a huge role there. The big question is really what we started with at the starting of the panel is, how fast and to what extent will the business/premium passenger come back, which will drive that, in my view.
Okay. Well, yeah, sort of related to that, just one more question from the audience. Richard talked about the devastating impact on wide body deliveries over the next 10 years or whatever. What about carriers such as the Middle East carriers, the big global connectors, perhaps some of the Asian carriers as well, who have built entire businesses around a long haul wide body model? Some, including Emirates, the widest wide body you can, the biggest wide body you can have. How does this leave the Middle East carriers and their business models? Does anyone want to have a go at that one?
I'd recommend them. There are a lot of regional aircraft now, but that's.
Yeah, the regional UAE market there, Arjen, kind of small.
Yeah, I know.
But it's a concern. It absolutely is. I've always said that, frankly, the one thing that sustains them best is the failure of India to get its airline industry act together. If they do, that would take an awful lot of their traffic away. And I always thought Jet Airways would succeed. And what did I know? Clearly, that market and related markets still very much theirs. now these guys offer a great service. They're geographically in a terrific position, but the more people competing with them with 787s and A350s, the more they're going to feel that pain, especially since, cheap fuel doesn't just damage some of their economies. It also makes, heavier jets flying point to point 8,000 nautical mile routes, overflying them, kind of more attractive, right? From an operating cost standpoint. So I wonder if they're just going to have to live in an age of diminished expectations for some time.
Okay. Does anyone else want to come in quickly on that question before we move on to our final question?
We'll just to add to Richard, I called it regional aircraft, but these aircraft have a 2,500 mile range, right? So that's still quite a difference nowadays. But anyway.
Okay. So my final question, we've come almost to the end, but I'm going to put you all on the spot. And I know Richard has come out, I think, in a recent blog with a prediction on this. But what year will we see a return to the orders and deliveries and traffic peak that we saw in 2019? Who wants to go first on that one? Richard, you go first, because you've already, I think you said you came out and gave a prediction fairly recently in your blog.
Yeah, I'll focus mostly on traffic, and here's where I'm kind of, sorry, Brian, you're intimidating me, but I'm going to deviate from the late 2023, early 2024 number that a lot of us in the industry had come up with. I'm going to go with late 2022. So much has changed, like we started off with since March, whether it's the vaccine, whether it's the economy, whether it's pent-up travel demand. It might be that division sign, but I think we get back to late 2019 in late 2022. And if anyone wants to
traffic, in terms of traffic,
2 years.
Okay. Brian, what I don't know whether IATA's made an official forecast on this, but what is your gut feel?
Oh, I mean, we have made an official forecast on traffic. Yeah, I think Richard's right. Certainly on domestic. I mean, I absolutely will see domestic passenger numbers back by next year with the vaccine. I'm a bit more pessimistic about international markets, though, and because of the short haul opening up before longer haul, the RPK or the RPM numbers will lag. So we're still thinking late 23, 2024 for that one.
Okay. Rob, on traffic and on orders and deliveries.
On traffic, we have some scenarios that vary between May 23 and mid 24. So mid 23 to mid 24, regionally asynchronous, of course, with China coming first, despite all of what I said earlier. Orders, the backlog is still fairly big, actually. The backlog is still 12,000 aircraft at the end of last year. I mean, it's going to be a long time before I think we see. I mean, net orders, which were negative 300 last year. Net orders, exceed 1,000 plus in a year for a number of years. Deliveries, I mean, Richard talked earlier about, I think he mentioned single aisle and thinks rates coming back. I mean, we're a bit more pessimistic than Richard. We think that there's no prerogative ever for Airbus to get back to rate 63, despite what they're talking about for readiness now. And, we doubt if Boeing can make 57 with the MAX either. So maybe I'd say for deliveries, never. Although never's a long time, of course.
But in the 2020s, I guess.
Not in the 2020s, yeah, absolutely. Yeah.
Paul?
So I'd be confident of domestic travel return in 2022 to 2019 levels. And there are so many unknowables around the long haul that it's very difficult to say. Being an optimistic sort, I'd like to think that's early 23, but we will just have to wait and see. And I'm with Rob on orders. 30% of the fleet grounded, very, very challenged operator balance sheets, inflated levels of orders in the run up to COVID. I think it's hard to make a cogent argument that we will return to those levels of orders and deliveries in a forecasting timeline that would be meaningful.
Okay. Arjen, your view on traffic and orders and deliveries? Yeah,
and I think on the total market, I'm well aligned. I think on our segment specifically, there's a lot less overhang, and I think there's going to be more demand on that segment. So we think aligned on the domestic, if global recovery end of 23-24, probably domestic is a year ahead of that. And we think in the same time frame, we will see the regional segment pick up again. So I think the situation on the regionals is quite a bit different than what we see on the narrow bodies, let alone on the wide bodies, which is a completely different market.
Okay. Well, there's so much we could have covered. We didn't even touch the 737 MAX. We didn't talk about 100 subjects. Thank you all for your questions. I'm sorry we didn't get round to more than a fraction of them. I'm just looking at the tally, and I think we had something of the almost 100 questions in. So thank you very much. It would have taken us a day to get through them all, I think. I'm sure we could have talked for a day. It would have been a great day's conversation. I'm hugely indebted to our panel. Thank you for your time and your valuable insights. And of course, we're extremely grateful to Embraer for its sponsorship of our webinar today. We're back on the 28th of January with a webinar looking at the impact of the crisis on the pilot community. And for details on that and to register, go to the homepage of FlightGlobal.com. So in the meantime, thank you all again. Thank you for listening. Thank you for taking part. Goodbye and stay safe. Thank you.